The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Wednesday morning, everybody. Happy CPI day. You ready for some action in the markets today? We got it this morning. We'll see if the first hold moves. We've seen this move before. In terms of you get one move, we've given back now about 20 points in the S&Ps. As our man Basil Chapman is in the den right now. The day is young, folks. It doesn't get much younger, man. Day's not even open yet in terms of the opening bell. CPI report out 8:30 this morning. I got the chart of the S&P up on the Thinkorswim platform. Markets jump about 1% on the S&Ps from about 41.40 up to almost 41.80. We've given back about half of that gain. We have yields lower. We have markets higher. S&P up by 20. NASDAQ 100 up by 91 points right now. You got the Dow up by 137 points. We were just above 34,000. How about it? We were inching towards 4,200 on the S&Ps. Didn't quite get there. Got to a price point of, let's see what the high is on the S&P as my charts try and catch up here as the market moving pretty quickly. 4177.75. Russell up by 0.9%. We hit 1820. We're back to 1814. Bitcoin holding up above 30,000, 30,405 right now. You got crude up to $82.11, man. Crude. Interesting. The energy component of CPI, we'll get over it in a moment. Headline CPI, we're at 0.1%. We're now comparing ourselves on the headline number to a year ago when energy prices were spiking. We have a lot to talk about this whole hour, folks. We'll talk to our man Kevin Hincks after the first break. Always a great conversation, especially on days like this. And then we're going to talk to our man Teddy Kegstad at 40 past the hour. Great day to have him on. We'll talk some dollar. We'll talk some Forex. We'll talk some yields and markets as well. So stay tuned for that as well, folks. Gold contract catches a bid. Gold. There's a spike for you. Up to 2045. We get back some of it. We're at 2035 right now in the price of gold. You jump to notes and bonds. We got some higher price and lower yield coming at you right now. We're looking at a 10-year of 3.38%, the yield on the 10-year. My chart's a little slow catching up this morning. Come on. Come on. Where are we at? There we go. There's your 10-year spike. You talk about a spike, man. Almost a full point to the upside. We give back some of it. As in about 12 ticks, right? We give back, we're at 115.30 right now. As I said, the yield on the 10-year, about 3.38%. We jump over to the dollar index. Moving as you'd suggest, there's a drop for you, man. We got lower yields, right? So what's going to happen? If you have lower yields in the U.S., you're going to have less demand for that yield. Less demand for the yield will be then less demand for dollars to achieve that yield. You got to have dollars to get dollar-denominated yield, right? This is some of the conversations we have at Teddy at 40 past the hour. So what happens? We have lower yields. You're going to have less need for dollar. You have a dollar pullback. What happens? The market, when it comes to earnings, they might like a weaker dollar. On that front, you have markets higher, yields lower, dollar weaker. We're back to the whole relationship that we had been in for some time, but it is interesting, folks, because there's a lot of talk that this number could have been a lot worse. And meanwhile, the market, yeah, we're up about 18 points from where we were trading at, right? The market, almost right back to where we were yesterday. You were up to 41.50. We're trading at 41.58. So keep that moving context. We got about 20 minutes to go until the opening bell. And let's get into some of the numbers. So here's where I'll start it off. I love how the Journal does this, and they do it usually on the CPI numbers where they put this nice little chart on the front. This is the front page of the journal.com, WSJ.com. U.S. inflation eases to 5%, the lowest in nearly 2 years. That's the overall number. And man, you look at that overall number, we're dropping. We're dropping like a rock. But folks, that has a lot to do with energy prices. You had natural gas getting talked about on the headline basis for the month of March. I would focus on the core. And yeah, there are some areas that will give you reason to think that inflation is coming down, reasonably so on the core level, but it is nothing like what's happening on the overall. Okay, you check out the core number. We're at 5.6% from a year ago. Now we have some food going down. I was putting in the den today. We have Eggs are down almost 11%, butter's down 6%, and ham is down 5.1%. Omelets for everybody. That's how I put them in. Love a good omelet, right? Nice ham and cheese omelet. Where's the cheese in there? We need some cheese in there, man. So some of those abating. We got some big numbers, man. You want to see a chart? Why not? We'll jump into this one, man. This is an interesting one. U.S. shelter CPI year over year with the contribution of how it goes into it. Let's blow it up. Check out this chart, man, for shelter. Okay, this is shelter CPI year over year. You see the run that's starting. Owner's equivalent rent just through the roof, man, in terms of that number going up. And very tough to say that that's going to abate anytime soon. So there's a lot of pockets in here, but quite the interesting chart when you look at it. Rent, I think shelter was up 0.6% potentially in terms of on the monthly basis. And I'll tell you, folks, I'm renting out a place right now in Tampa myself. And it's interesting, right? I'll give you that. It's I have a duplex in Tampa. I'm renting out one side of it. Last time I rented it was about 2 years ago, okay? And I rented it for $1,750 a month. You're looking at a 2-bedroom, 1-bath property, about 800 square feet, slightly on the smaller side, but bigger than you'd expect. Open floor plan, 2 bedrooms, 1 bath. You're a block from Bayshore. On one side of you got $1 million home. On the other side, you got a $1.3 million home, and you have an opportunity to live. And email me, folks. You're looking for a spot, email me, man. I'm looking for tenants right now. So please, if you want to live a block from Bayshore, 2-bedroom, 1-bath, beautiful home, redid it completely. Point being, I rented it 2 years ago for $1,750. Okay, what am I putting it up for right now? $2,200, and I got about 20 leads, man. I'm showing it 2 times a day. That's a 25% increase over the period of just 2 years. Many times you got tenants that are in there much longer than that. Okay, I've had tenants in there for 4 or 5 years. There is going to be lag. That's going to be consistent. That chart jumped out at me in a big way, to say the least. But we jump back to the numbers that we're looking at. Keep your eye on the core, man. And I'm going to jump to energy. And we're going to have a lot of time to jump around this hour because it's important not to get kind of caught up in, back things up, in the headline number. Because we're in April, folks. You back things up. Boy, we just got numbers from March. Look at the energy prices we're dealing with March, okay? This acceleration in crude is not going to calm generational inflation, okay? Yes, it's eased things. I would argue that right now, though, the pressure is on the flip side of that, okay? So core is still an issue, and we now face potentially some difficult times on energy prices because, you know, the Saudis have basically said $70 is the floor, man. It's not happening. And I imagine that as we come into a political season that's going to stay consistent. We're at $82 today. And yeah, we go from there. But look at that. I mean, they should just take that headline number off in terms of the chart because you take a look at the orange one and you want orange to get back to 2%, folks. Keep your eye on that one, man. Okay? Now, getting into some of the numbers. As they put it, food coming down, man. U.S. core CPI rises firmly while showing some hints of moderating. It's always the kicker, right? Excluding food and energy, CPI rose 0.4% last month after a 0.5% increase in February. Okay, the overall measure edged up 0.1%, reflecting a pullback in gasoline and natural gas. I don't think we're going to see $65 again in crude, folks. I don't think it's happening. We're coming into the summer, and OPEC Plus has told you, listen, that's not happening. Okay, from a year ago, core CPI 5.6%. Kevin Hincks talked about it yesterday, man. 5.6%. The first time in over 2 years that the core is above the overall measure, which was up 5%. That's why I bring up energy, man. Stay tuned. When we come back talking to our man Kevin Hincks. We'll be right back, folks. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. We got the VIX, we got the S&Ps up 23 points right now, trading at 4160. We've given back about 17 points. We got the VIX with an 18 handle, 1862. To talk about the CPI in the markets, let's jump over to our man Kevin Hincks. Every trading day, folks, 12 noon Eastern time. Fast market from the TD Ameritrade Network right here on Tiger TV. Your host, Kevin Hincks, Tom White. If you ever want to learn about options, folks, please check it out. And boy, we got some action today. Kevin Hincks, good morning.
Good morning, Tommy O'Brien. Yeah, a lot going on here today, but I'll tell you, Tommy, the market is more impressed by this number than I was because I see a few storm clouds on the horizon with this number, and I'll tell you what I mean. Really good progress in the year-over-year headline CPI going from 6% to 5%. But the core was up a tenth, right? The year-over-year core went from 5.5 to 5.6%, Tommy. And if you break down the numbers in the CPI data, the lion's share of this decrease was energy, Tommy. Energy down 3.5%. Energy commodities down 4.6%. Energy services down 2.3%. Tommy, energy has rallied from $70 to $82 in the last 20 days. So that seems very temporary, that relief we're getting there in terms of energy. Besides that, new vehicles up 0.4, used cars and trucks down 0.9. That's a solid number. Food unchanged overall. Food at home down 0.3, away up 0.6, shelter up 0.6, apparel up 0.3, transportation services up 1.4%. So this was a more mixed number than I think the markets are reacting to, Tommy. And this energy problem, the fact that it dominated this CPI report worries me. I think there's a storm on the storm clouds on the horizon, Tommy.
I like the way you're thinking, Kevin, and I agree with a lot of what you said, man. And in the context I was talking about at the beginning of the program, I mean, quite a spike. S&P spikes about a full percentage point, almost 40 points to the upside. on that number. I mean, we were at 41.50 yesterday, Kevin. We're trading at 41.59, right? 9 points away from just kind of intraday yesterday. So the market, not exactly a huge move. And I was listening to some analysis even this morning. I agree. It's like, some pretty lofty numbers. And I talked about crude, as you put it, and even natural gas, right? Just everything. Not sure that's going to save us going forward in terms of the inflation, but pretty interesting. We've seen it before, Kevin, in terms of that first move, maybe not the move indicative of where we go, even going back to a year ago when the Fed first started hiking. You actually saw the market really catch a bid on that first hike back in March of 2022. You traded, down into that number, so it's going to be interesting to see where we go there. You got the market at 41.60, Kevin. We get Fed minutes as well today. We got PPI tomorrow. We get bank earnings that kick things off on Friday. As a trader, we got the VIX with an 18 handle right now. I love how you laid out the economic play on things. As a trader, how are you looking at this market, Kevin, with 41.60? Pretty lofty numbers. And I agree, man. I was on the Journal, just the Journal online, the front page of WSJ.com. And they have, Kevin, the headline, CPI, and then they have the core CPI on a graph. And, man, if you take the headline off and you just put the core number up there, it's at 5.6, and it looks like it's going to take a very long time to get back to 2% if that's the trajectory it's on, which is pretty interesting when you get the market sitting at a pretty lofty level. With that economic data, Kevin, I know that was a long one, but where do you go as a trader where we're almost at 4,200 right now? And again, we're coming into earnings season, man, which a lot of analysts are talking about. That may be one of the clouds that's looming.
Yeah, well, remember, you've got a May 2nd and 3rd Fed meeting, and the markets will probably be choppy into that meeting. Remember, you've got first quarter earnings in banks on Friday, banks probably the beginning of next week, and then we start getting into large cap tech, and those stocks have run a long way during the first quarter, so that should cause some fireworks. But Tommy, you've got the overall look at this market. Let's put out a scenario. Let's say Jerome Powell raises one more time and then pauses or discusses a pausing in rates. Market's going to like that one way or another. I think the fact that the European central banks have to be more hawkish than us. Remember, we're closer to the end. They're not. That can cause the dollar to go back below 100, and that would be good for stocks. So there's a lot of reasons to be pretty positive about stocks. Doesn't mean we're going up. It means we're going to be choppy and we may work our way higher. But all these scenarios that I just laid out, they have to, come through for that to happen. So first quarter earnings is going to be real important here coming up starting Friday. And then we get, more data, a Fed meeting in May. If Jerome Powell pauses, could be a fun summer.
What do you think about the minutes out later this afternoon, Kevin? I mean, obviously pretty important in the context of where we are. We get CPI data, and then we get Fed minutes. Are you looking for anything from them in terms of volatility? Do you expect a surprise in there or anything like that?
It's funny. In my career, Tommy, the market always moves on the Fed minutes. Should it? I don't know. I don't necessarily think so. It's old data, but the market still always moves on the Fed minutes. And I think this Fed minutes may show discussion about pausing on interest rates. Because remember, when this Fed meeting happened, it was in the middle of the banking issue, with SVB and other banks. So there may be some notes on discussions on pausing, like Jerome Powell said in his press conference. So, yeah, this may be a little more interesting Fed minutes than normal, but the market always moves on the Fed minutes. Should they? I don't know, but it always does, Tommy.
And it's so interesting we get it on the heels of the CPI, which just factors in tremendously to what the Fed is going to do. And I pull up just S&P futures on the Thinkorswim platform, Kevin, just for the listeners out there. And it would be interesting, this is my take, right? Because the market, I feel like the market is not getting ahead of itself, but it's priced with some pretty decent action in terms of to the upside for 4,200. And how interesting would it be, Kevin, if all of that gets priced in by the time we hit that May meeting, maybe. And maybe that eventually when they hit that pause, the market gets ahead of it as usual, and maybe that could be the pullback. And I only say it because, boy, folks, when you back it up to March of 2022, when the Fed began hiking, we came into that hiking at almost 4,100, and the market accelerated to 4,600, folks, after that hike, and then we sold off to almost 3,600 in like a heartbeat. So as we know, Kevin, we get to find out. With that in mind, I'm sure you guys are going to have plenty to talk about today, Kevin. Do you have any equities yet that you know of you'll be talking about at 12 o'clock?
Well, we finally have some names we can start to talk about, which is Delta comes out with earnings tomorrow morning before the open. We'll surely cover that. Fastenal, another S&P 500 stock that we have. We're working on the third one. We're not sure. Probably a theme. We may look at another airline, but definitely Delta and Fastenal today.
And Delta, of course, energy, a component of their earnings in a big way. And yeah, the energy story is going to be a big one, man. We're sitting at $82 in crude. We were down to what, $64, $65 last month. I don't think we're going to see those prices anytime soon. But we get to find out as always. Kevin, I appreciate the time. The mornings don't get much busier than this morning, man. I appreciate it as always. We'll be watching at 12, and we'll talk to you tomorrow, man.
Thanks for having me on, Tommy. Have a great day.
Always a pleasure. Folks, check out the program. Days like this, when you get some movement, man, you got economic numbers, you got Fed minutes, you can learn a lot from the markets when they're moving like they're moving, folks. Not like days like today. It's like months like this, years like this. We got some volatility. It's a great time to learn because it's difficult to learn, folks, when we're in a market that we were in, prior to COVID for 10, 12 years, we're just inched upward with a VIX around 11, 12, 13. This is a trader's market. Please check out Fast Market. I appreciate Kevin taking his time out on a busy morning. I'll be watching at 12. Check it out, and we'll be right back when the market open, folks. Don't go away.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has just launched their new trading room, the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
market's open, folks. S&P's up by 20 points, 41.56. When you put it on a weekly, right, 4,200, critical area on this chart in terms of an area of resistance. We hit a high today of 41.77.75. Didn't quite get back up there. January, we had a high of 42.08. But just speaking technically, man, right, critical area in terms of this is bumped into that area. How many times? You're talking about once last May. You got above that area to a high of 43.27 in August. You go back to a spike high in December of 41.80. You got up to a high of 42.08 in January, and you got up to a high of 41.77.75 in April. And the reason why I bring up the March story, folks, the market gets ahead, okay? So the market will love when they pause. They'll love it. Of course they will, because that's the end of the hiking cycle. But, man, be careful, because we just traded from an area after a banking crisis, okay, up, 310 points right now in the S&Ps. So there's a lot of optimism priced in. And, don't be misguided by the fact that we cut in March, okay? And let's put it on a daily, because it was literally the day, okay? We'll go back 2 years. We'll zoom in on the action. There is March 14th, and it was a rocket ship, folks, from a low of 41.52 up to above 4,600, and then kaboom. You dropped 800 points from March 29th to May 20th, okay? And you ended up not making a low in the market until, 7 months after they started hiking. I got to get my terminology correctly, right? They hiked for the first time in March last year. Market accelerates higher. Didn't bottom out for last year, at least, until about October on that area. So we'll get to see where it plays out. But critical level in the markets, technically approaching an area, of resistance nearing 4,200. All right, let's see how we have dollar index yields. We're talking to our man Teddy Kegstad coming up next, so we'll talk to him about some currencies. Just checking back, though. Dollar right near the lows right now. We jump to notes and bonds. A little bit of a give back, 115.29 right now on that 10-year. All right, let's talk a little bit of banks. So we get the banks with their earnings on Friday. JP Morgan up by 0.8% right now. We got Citi with their numbers on Friday as well. Citi up about 0.7% right now. What do we got? Wells Fargo. Citi up 0.5% right now. Wells Fargo up about 0.5% right now. We get Bank of America, Goldman Sachs, JP Morgan, as Kevin was referencing, beginning of next week. But I'm going to jump to banks here. Whoops, what do we got going on? Excuse me. 1 second, my computer hit the wrong button. Okay, we jump back here, and how about the banks, man? So here we go. You want to talk about losing deposits? Excuse me, this story out here from Bloomberg this morning. Top U.S. banks. I'll get there. Come on, get off. To a real $521 billion deposit drop, most in a decade. Now, here's the kicker, man. The top U.S. banks are in the best possible spot you can be in as a bank right now in the last month, right? They've gotten a little bit of surplus, but they have problems, period, folks, because there is competition for money, man, period, okay? The CD rates, folks, are pushing 4 to 5% right now. That is guaranteed risk-free rate of return. Keep your money under $250,000. No reason to trust the government. They're going to bail you out. They probably will, but why would you trust it? Okay? JP Morgan, Citi, Wells Fargo, they're kicking it off, as I just went through those three banks on Friday. And I'm just going to show you the charts, man. Now this is the biggest drop in over a decade. Let's get into the numbers. They're expected to have tumbled $521 billion from a year earlier. That's just deposits. Now remember that the loan to reserve ratio, okay, banks lose $521 billion in deposits. Man, they got to scale back loans that are multiple times that deposit, right? Banks take in $1, they lend out $8, whatever it is, okay? They've lost $521 billion of deposits between the three big banks alone. Now, you'll say, man, the big banks, they got a lot of money, and they do, okay? The decline, okay, which includes a $61 billion slide in just the first quarter, comes as a late influx of cash following a crisis at regional lenders. So some of those big banks got a huge flow from the regional banks, rightfully so, where people were taking their money out of smaller banks. Maybe they had money at risk over the FDIC insurance level. They wanted to get that into one of the systematic banks, knowing that those three banks aren't going to fail, folks. The government isn't letting those three banks fail, that's for sure. Nobody that's a depositor at JP Morgan, Wells Fargo, or Bank of America. And remember, Bank of America comes out with their numbers next week. I think it's Tuesday, okay? By far, the biggest issue for the banks is around deposits, both for the quarter and for March. This is Wells Fargo analyst Mike Mayo. Non-answers are a failing grade for this take-home exam. And look at the drop. These are not small numbers, man. These numbers continue. It's a substantial number even for how large the banks are. We're talking about $500+ billion, okay? And look at these banks. I mean, JP Morgan just went from 2.6 trillion to 2.3 trillion. Bank of America just went from 2 trillion to 1.88, and Wells Fargo just went from 1.5 trillion to 1.38 trillion. Yeah, remarkable, okay? And for smaller competitors, the problem is the customers want more for their money. Yeah, and the recent collapse at the three regional lenders have left consumers jittery, rightfully so. Okay, there is no reason for you to have your money in a regional bank if it's over $250,000, folks. Go create another account at another bank. It's that simple. Lenders began seeing deposits dwindling as early as the start of last year, right? That's when rates started to tick up. But these are big numbers, man. And so we get bank earnings on Friday. Profitability projected to rise. Net interest margin at the big banks is expected to rise from last year. You better believe it. But guess what? People aren't stupid, man. And we are at a level, listen, people are lazy inherently, okay? That's not everybody is inherently lazy. And for the longest time, if you were in the big banks, there just wasn't that much incentive to make the change, right? When you make a change from your bank, it's not easy because you have your direct deposit going in there. You got your mortgage getting taken out. You got your car payment getting taken out. Maybe you got some childcare. You got automated charges. You got your streaming companies that are getting your recurring billing going on, whatever it is, right? So, but we've reached a level, folks, where the amount of money that you can earn on a CD or even from a savings account, whatever it is, high yield savings account, it is substantial to the point where it gets people over that laziness. It gets them to move the money. It makes the changes because you're talking about on 100 grand, what, $5 grand a year? You're talking about if you got 200 grand in there, $10,000 risk free in terms of that money that you're getting back. So yeah, pay attention to it, man. Because they're dropping at the same time that they got problems too, man. I mean, Bank of America, right? How much money do they have in loan held to maturity securities? Hold to maturity. I had to get my terminology correctly, right? They got some big problems, Bank of America, man, in terms of the losses on their hold to maturity securities on their balance sheet at the same time that they just went from 2.07 to 1.88 trillion. Folks, that's like a 10% drop. Okay, a 10% drop in their deposits over the period of a year. Those are substantial numbers when you think about, again, that means that they have to pull back the reserves at a huge multiple of that number. Interesting stuff. Nonetheless, Wells Fargo up by 1% today. Stay tuned, folks. We're going to be talking some currencies. We'll be talking some dollars, some yields. We'll be talking to Teddy Kegstad when we get right back. Stay tuned.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the market's open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We get the S&Ps up by 17 points right now. You got the SPY was up to a 413.75 initially on that spike at 8:30. We give back some of that gains. We're still up by about 17 points. Let's jump over to our man, Teddy Kegstad. Folks, you can check out Teddy's Tiger Forex report. Every week, he puts out a new issue Monday mornings. You can check it out under the newsletter tab. Just head on over there. Excuse me. You hit subscribe. It's $97 a month, folks. It comes with a 30-day money-back guarantee. And 1 week from today, Teddy's got an outstanding webinar. It's a live webinar coming up for subscribers from 4 till 5 p.m. 1 week from today, April 19th. So you sign up for the Tiger Forex report. You get a monthly newsletter. You get the live webinar coming up in a week. That will be archived. If you don't like it, folks, you cancel within 30 days. You get a refund. You can't go wrong with that type of action. And Teddy Kegstad, talk about action. Love talking to you on days like today. Good morning, man.
Good morning, Tommy.
So where do you want to start off? Let's talk about the action this morning if we can. CPI, we got action in yields, we got action in the dollar. Market's giving back some of the gain, but still up a bit. What'd you think of the number and the movement in the markets this morning?
Okay, well, you had the CPI number that came out right when the Treasury bond market was opening, so you had an explosive reaction, obviously. The number is, I guess, somewhat kind of nice, but I really think it's more of an overreaction, knee-jerk reaction to the number. I don't think you really need to take too much stock in it, especially long term. We have the minutes coming on later, which, to be quite honest with you, I really don't think you're going to see any change in the minutes or anything else that we have coming out of the Fed. I mean, the reality is there's a banking crisis still going on. There's a whole bunch of things that have not changed even remotely. And CPI, even though it may be somewhat kind of nice right now, it doesn't matter. People can see if you bought gas in the last week and a half, you know that things are not going in the right direction. So, and I think that that's what we really have to pay attention to.
Yeah, I agree. I was talking to Kevin Hincks earlier. He referenced energy, and energy, I mean, it's rocking right now, man. We're at 82.60, and yeah, I don't imagine we're going to see $65 in crude anytime soon. Again, doesn't mean it can't happen, man, right? But there's pressure to the upside, I imagine. And I don't think we've seen anything. I mean, I put this chart up, Teddy, going back a year ago, man. It's just lower lows and lower highs from 123, and that's not even the spike back to March because we're past that already, as in just the spike we got in July. It's just been lower prices, man. It just can't happen forever. The crude goes from 120 down to $60, eventually. As you said it, I hadn't even, seen the move, let alone the 10-year, the 30-year, man. We just spiked to what on that news? To
It was basically flat to start the day out and exploded to was up over a handle, and then it pulled back to only being up about 15, 16 ticks, and now it's back up, I think, kind of close to like 25 ticks or something like that. So,
amazing.
Yeah.
Amazing moves. And what do you think about the dollar index? Dollar index gets a pullback here. Held on to kind of that pullback. I've seen the yields reverberate a bit, but we came into that news at about 102.10. We're at about 101.70 right now. We got a lot of listeners, of course, watching the dollar. We're back to approaching kind of those areas of January. We had a low of 100.82 I'm looking at. What do you think about the dollar index kind of price levels? Maybe you can give us some areas of support and resistance. I know you do a great job of that within your newsletter for the dollar index.
Sure. Well, if you look at the dollar index right now, it's a really tough gauge for most currencies. So if you're trading the majors of the majors, like the pound, the Swiss, and the euro, then you can look at that as that's where the dollar index is sinking. But if you look at like the Aussie, the New Zealand, and currencies like that, they're not coming off. They're not banging new lows. Like the Swiss is really, really falling down right now, the U.S. dollar-Swiss relationship. And that's something we talked about back in December, that there's a big divergence in currencies. So where's the flight to quality? Where's the real trend? Well, the U.S. dollar Swiss is in a bear trend. It has been for a while, and it's confirmed without a doubt today that that's the resolve that it has. But if you look at the British pound U.S. dollar, it's trying to make new highs, and it did make a new monthly high recently, just a couple days ago. But it's having a lot of trouble with that area. So I would use a lot of caution trying to use a dollar index as a gauge, because the euro and the pound especially, they have a lot of problems. So if you're bullish on the European currency versus the dollar, the Swiss is the right side to be on, without a doubt, meaning short the U.S. dollar Swiss. But I've used a lot of caution with the euro and the pound, because their central banks are all acting in tandem right now to help us with what's going on in supposedly just the U.S. But we know that the banking crisis has moved over to the European banks as well. So for as far as levels, I would say right now with the British pound, the key is if they can hold above this 124.40 area, that's a big deal. So basically where they're trading at today, if we settle up here and sustain a trade up here, we will probably buffer some resistance, but I would be very cautious with any rallies that you see there, so that I don't think they're going to be, I don't think this is some major trend extension that's about to develop here whatsoever.
Nice.
And especially as oil starts to rally as well, because if oil continues to rally, well, even though the petrodollar is getting killed, it's still a valued part of the dollar value. So as oil does increase, it helps to slow the decreasing value of the dollar as well. So when it gets back to that dollar index things, please use caution in using that as a gauge. Right now, there's just too much divergence. I would focus more on the fact that the Swiss is a true bull. Look at the U.S. dollar yen trade. Now, obviously, on the reaction of the numbers, they went in tandem, really hammering the dollar. But if you look at the pullbacks, the yen bounced back pretty strong off of its lows versus, say, the pound and the euro versus off of their highs. So that once again shows that how the oil relationship also, like when it comes to the U.S. dollar yen, if oil continues to rally, even if yields drop, it doesn't matter. That cancels out that effect. So the U.S. dollar yen trade, for instance, is not going to be such a bear. I would be very cautious. I'd be more into buying dips than selling into this to that market. I would be very cautious being a bear on the U.S. dollar yen, and especially in the short run when it comes to those variables.
And folks, that's the great information, man, in terms of the breakdown. You should check out the Tiger Forex report. And Teddy, if you can give the listeners just a glimpse, and you do such a great job. This is the stuff that Teddy's going to talk about, folks, in the webinar a week from today, in terms of how he breaks down the letter, how he breaks down the currencies, and how they go into it. Because the dollar index, Teddy, gets so much attention. But I love the education that you've given myself and the listeners over the years in terms of what factors into those, in terms of whether you talk about crude. I think we talked about that even last week as you were going over it. Can you give the listeners a little glimpse, Teddy, of what you'd be talking about a week from today for the Tiger Forex Report subscribers coming up next Wednesday?
Sure. Well, the main focus is looking at what are the major factors driving the dollar. So not the dollar index, the dollar. So when you look at people look at it as a very generic term. They think the dollar index is what the dollar is all about. That's not the case. So we're going to do just like we spoke about. Oil, how does that reflect the dollar? So that variable will be concentrating on the U.S. dollar yen especially. Then we also have the central banking crisis, what's going on, or excuse me, the banking crisis.
We can call it a central banking crisis. That's okay.
Yeah,
go ahead.
It is that too as well. And there's two things really going on. And you can see like the way the Treasury bonds are acting. It's a shell game going on right now. And that's something I'm going to talk about a lot in that webinar is that where the media is just fanning the Fed being hawkish or if they're going to come off the hawkish stance and whatever.
Sure.
People aren't looking at what's really going on. The Fed is propping up. They're printing money to prop up the Treasury bond market. That they're buying all these assets from the banks at the losing prices that they paid before. So we're going to talk about how that's going to influence the trends in the currencies moving forward.
Folks, it's an outstanding webinar. It's an outstanding letter. You get a 30-day money-back guarantee. You're going to get an education. You can't go wrong. Check it out right now during the break. Teddy, I appreciate it, man. We'll talk to you a week from today, and I look forward to that webinar a week from today as well, man. We'll talk to you next week.
Be a fun Wednesday. Take care.
Have a great one, man. We'll be right back for the open for the market, folks, and it's tanking. Stay tuned.
Has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got the NASDAQ actually in the red. How about that? S&P's up by 12, and we've caught a bid. We're 5 points off of the lows. That is a 1-minute chart I have up there just to illustrate, man, the run that we've had since 8:30. What did you get? You got 6 minutes is what you got, a positive action in this market. And since then, it's basically been all negative territory since we made the lows in about the last 10 minutes or so. As our man Basil Chapman says, he's coming up next. The day is very young, folks. We get Fed minutes today. We got PPI tomorrow. We get banks on Friday. I mean, I talked to you about the banks. They're losing deposits at a record pace going back, and that's not going to stop anytime soon. So that's going to be pressure on the market and everything. Markets back to about 41.50. I mean, that was a pretty great CPI report, right? Now, there's pockets in there that are a little bit worrisome, as Kevin's talking about. I mean, the energy story of how it's shifting the headline of everything, pay attention to that, okay? But that was a pretty good number. What would happen in this market if we got a headline number at like 5.3, 5.4? What if we got core at 5.7, 5.8? We got some great numbers, man, and the market's like, we're trading pretty high right now. You know, there still might be some room here for some tough territory. And I'm going to finish it up with, I just got to go, well, let's see if they still got it on the front page. Yeah, they still do. Pay attention to this chart, man. Take the headline number off, okay? Look at the core number, because we're not going to have anything like we just had with energy on the headline basis. The core is where the Fed is focused. They want it back to 2. That means it has to go from here all the way back to here. And the trajectory is not their friend at this point, folks. And there's pockets that are going to be persistent, to say the least. We got market volatility, though, as well, and we'll finish it up with the VIX. You got the VIX right now, 1876. 1876. Is that right? It is. Remarkable low volatility for what's going on in this market. And why not? We'll finish it up with bonds. How about that movement in the bonds, man? To 133.15, back to 132.08. to 132.17. Buckle up, folks. It's going to be a wild one. Remember, Fed minutes today as well this afternoon. Thanks so much for starting your day with me, folks. Stay tuned. We got our man Basil Chapman coming up next, and I'll talk to you tomorrow. Have a great one, folks.